For Rose and Paul, their home provides a piece of paradise. When they were buying, Rose wasn't going to walk into a bank branch to sort out a loan.
By going through a broker, it's more of a streamlined service. It's more personalised to your needs. They just take care of everything for you.
2 years of steep hikes in interest rates have sent more customers to brokers as people try to get a better deal on their home loans and reduce crippling repayments.
If you're wanting to get onto a bank and you call the customer service number, by the time you get to someone, you've been on hold for so long. So I guess when you find a broker, you just want to hold on to them.
In the 3 months to June 2019, brokers wrote 55% of all new mortgages in Australia. 5 years on, they're responsible for nearly 74% of new home loans, the second highest result on record.
It's not actually just on helping them get the mortgage, but educating them around what's required, getting them finance ready.
Banks pay brokers for bringing loans to them, even though most mortgages still flow back to the so-called Big Four.
Banks have to come to the broker market to actually get their quota and to meet their fill. So if they're not dealing with brokers, there's not enough customers out there for them to survive.
Brokers' share of the market keeps growing. That's despite Banking Royal Commissioner Kenneth Hayne calling out the conflict inherent in the model, where brokers are paid through upfront and trailing commissions for loans that they write, leading some to fudge the figures to get customer loans approved.
Why is it in the broker's interest to pin the customer down? Why is it in the broker's interest to interrogate the customer when the customer reports living expenses as X dollars a month? What's in it for the broker to say, "Oh, are you sure? Is that right?"
Of Hayne's 76 recommendations, making customers pay an upfront fee was the first one to be ruled out.
Hi, it's Donna from Mortgage Choice. How are you?
What did become law forced those arranging loans to work in a customer's best interests, something Rose's broker, Donna Campbell, says isn't a problem.
We're governed by the legislation and we need to make sure that it meets the client's needs. At the end of the day, I don't even know what my banks pay me, to be honest, so I just look out for what my client wants.
So you don't pay as a borrower overall, so you can take certainty in that, and also certainty in all of the remuneration regulation that is in place that importantly helps manage the conflicts that are inherent with a remuneration structure overall.
Others aren't as convinced.
If you're not paying for something and someone is getting paid through the process, to some extent you are what is achieving them getting paid, and that's the cause of the conflict.
Knowing whether you're getting a good deal can be difficult.
If the bank's looking at loans based on their bottom line, they're taking into account the commission, and you know, in all likelihood that is at times going to affect the interest rate that you get.
Rose doesn't worry about the commission structure her broker uses.
100%. Yeah, we don't mind paying her, especially the broker that we have. We trust her. It's just that peace of mind that she gives us.
Other customers want that too. In the United Kingdom, brokers' share of the loan market is closer to 90%.
We will approach a normal level set. You know, if that's 75, 80, I think it's definitely above what we're seeing at the moment.
Happy customers mean another headache for our banks.